CRM, Salesforce. This is my new building giant. This is a new stock I've been buying that is going to be a giant position for me over time. I bought another 40 shares here today in the public account at $244.99 for this one, okay? As far as my current position, it's up to around a $34,000 position, up to 140 shares. I made 2 buys so far. The first one was on September 4th, bought 100 shares, and then today I bought 40 shares, okay? So obviously there's like no meaningful move in the stock so far. I just started buying the position. I need to build this stock out as quickly as I possibly can. I need to get this stock fully built before we get to Q2 2026. Now, some of you might look at that and you're like, that seems like a long time. It's not a long time. I got to build this rapidly, really, really quickly here, okay? You know, when you've been in the market 17 years, like, you know, time moves faster, I guess you can say. It's kind of like when you're a kid. When you're a kid, it's like life moves so slow. Does it not? Like, you know, like a new year is like such a long time to you. When you're like 50 years old, it's like, oh my gosh, like the years just fly by. It's like we're binge watching this thing, right? So with CRM here, I got to build this position out rapidly, in my opinion. And the reason being, when it comes to tech stocks, which obviously CRM is a tech stock, right? Software company, things move rapidly. And when a stock starts a move, when it's a tech stock, it goes quick, man. Look at, for instance, Google. My Google position, I started that on April 23rd. It's already up almost 53%. Quick. And a lot of that move, honestly, has come in the last 1 month. The last month. And the reason stocks like tech stocks move so quickly is the narrative can change so quickly. From like Google had a narrative around it like a few months ago of like, oh, the government's going to tear them apart. Oh, you know, ChatGPT is going to own them. All this stuff, like all these narratives. Oh my gosh, they were just throwing them at Google. And then the narrative changed. And what happened? The stock appreciates 50+% in a snap of fingers. It happens so quick, right? So with CRM right now, that company's dealing with a lot of negativity. Oh, they're going to be disrupted by AI. Oh, you know, all these companies are going to build out products that compete with Salesforce and their own in-house products, and they're going to have AI doing all those things. And it's like, whatever. Like, you know, believe whatever you want to believe, but that's likely not happening, okay? Salesforce is so entrenched in these companies. Good luck. You want to, you know, build something in-house that is better than Salesforce? Good luck. Or something comparable is likely going to end up being a disaster. I heard something like, a stat recently I heard was something like 94% of projects were just complete failures that people were trying to do in regards to this, okay? Another stock that's moved huge is Oracle. Look at Oracle. You know, its stock was $105 back in the fourth quarter of 2023. Now it's $300 plus stock. These stocks move rapidly. Another good example is Avago, Broadcom here. Broadcom, you look at that one back August 31st, 2023, $83 stock. Today's $369. Now, this does not mean that Salesforce is going to 3x or 4x in the next, 2 years or something like that. But the moral of the story is when you have tech stocks down and out, you have to build the positions rapidly. You don't have all the time in the world. People think, oh, I have so much time. A lot of people thought that in 2022 and they were all wrong. You looked at Meta at $88 and people were like, no, it might go lower. I got time to buy Meta, right? Next thing you knew, Meta was 200 plus. And you're like, crap, I never started my position. What am I going to do? And then Meta was like 300 plus. And you're like, what? And then it was 500 plus. And then it was 600 plus. And it was 700 plus, right? And soon it's going to be 1,000 plus. So things move rapidly when it comes to tech stocks. You don't have all the time in the world. You see a great opportunity, you got to pounce. And you got to add that position as quickly as possible over a few months, and then you let it ride. And if you're right on the stock, like, it's going to go up massively, right? Now, Salesforce, I don't want to go super back in depth with Salesforce because I talked about a lot just in this past week on the main channel. There's one point I'm going to make that I'm going to show you guys in regards to AI cycle that I haven't made in these previous videos. But if you want to hear me talk very in depth about Salesforce, watch this video I produced a couple days ago called 7 Stocks You Must Buy Before 2026. Or you can watch this stock from 6 days ago. I bought a new stock today. You can watch those videos, check those out if you want to hear more in-depth talk about CRM, Salesforce. But this is a point I haven't made in regards to Salesforce that I think is an important point I need to make, okay? Because people don't understand. They look at this AI cycle and like, what's going on here? Like, these chip companies like NVIDIA are just booming, right? Broadcom's booming. AMD's just at the very beginning innings of booming. And they're like, but why is anybody actually making money from all these chips that are being sold other than the companies that are selling the chips, right? And so far, it's like very, very minimal amounts of money are being made from most companies, right? But you got to understand about this AI cycle is it started all in 2023. And very shortly into 2023, what happened? NVIDIA's revenue started to skyrocket. And then they skyrocketed more, right? And then basically this chip cycle around 26, 27 will, I would say more toward 27. In 27, the chip cycle will start to more flatten out. That does not mean no one's going to buy AI chips moving forward. That doesn't mean there can't be some slight growth in AI chips after 2027. But the crazy increase is like going to start seeming like almost like a flat line for the chip cycle part of this story, okay? But what we're seeing is, if you look at really revenue that came through for companies that, were non-chip related in doing AI projects, I mean, it was almost nothing in 23, 24, right? Because everybody's spending on these chips to hopefully make a bunch of money off them. But you got to buy all the chips. You got to get them all installed. You got to get the products built. It's like a whole site. It's a whole process. It doesn't just happen overnight. Like, I'm going to buy a bunch of NVIDIA chips and then I'm going to just make so much money the very next day. No. Then you got to worry about marketing and selling those products, getting them out to the customer base. It's a lag. There's a big lag here. So if you look at 23, basically it was almost no one was benefiting from AI cycle outside of NVIDIA in 2023, right? Then 2024, you might have started to see a very early glimpse of some companies like Meta started to, recognize like AI is starting to help them make more money by feeding people videos or pictures or things like that keep them on the platform more often. That means they see more ads. Advertisers have better results. So you start seeing very early. 25, we've seen a little bit more, but I think 26 and after is when things really start to take off in regards to software and AI and companies that are non-chip related, making fortunes of money from this, okay? And the thing is, when it comes to companies that are going to make money from software and AI and other companies, it's not going to stop. That's going to keep going for a long. Like we're going to be talking about, that's going to skyrocket all the way likely into the 2030s because of how big the lag is here. Like these companies aren't just going to like sell their AI products 1 year and it's done. No. All these companies are really going to be on monthly recurrings or yearly recurrings, and then they're going to keep marketing those products, selling them to more and more customers, more and more companies getting them in, going up on the prices over time, right? As customers begin to see more and more value. And that's a cycle that's like way longer than the chip cycle. The chip cycle is great, right? And this initial wave is going to be massive. Like, NVIDIA's revenues, AMD's revenues in 2027 are going to be just ridiculous, right? But you're going to see revenue growth start to slow a lot, 2028, 2029 for companies like that. And AMD is a big major investment of mine, right? And that's fine. Like those companies don't have to grow at, the sorts of clips they're going to be growing at. Certainly NVIDIA over the past few years and in AMD over the next few years. Like that's not sustainable forever. But on the software side, oh my gosh, in my opinion on the software side, inning one starts in 2026. And then we start going from there and there and there, right? We're already getting the early signs of non-hardware big money coming. Look no different than Palantir. Palantir's already showing you the early signs of like, hey, there's money to be made out here if you got the right products, you know how to market it right. And Palantir's got the right products and they've marketed phenomenally, right? And look at their revenues already. Went from 30% revenue growth to 36%, 39%, latest quarter 48%. And now the question is, where's Palantir revenues top at? Is it at the 48% number or are they going 50% plus? So, they're already, Palantir's already hint, we're showing you the way, right? If you look at somebody like Salesforce is already showing us the early signs that it's coming. If you look at their latest numbers, data cloud and AI annual recurring revenue, $1.2 billion. Such a small number compared to the overall revenue Salesforce does. Does $40 billion plus of revenue is expected this year, right? So it's like 1.2 billion, it's like nothing of that. But the growth was 120% on a year-over-year basis. They're going to be able to grow triple digits for a while. And then we're going to be talking about insanely strong double-digit growth. So Salesforce is already giving you the signal hey, we're going to make a lot of money from this stuff. Look at the growth rates we're putting up. Look at how fast the revenue's building. Palantir's already given everybody but the thing with Palantir, everybody gets it already. Everybody's like, okay, they see it. The stocks obviously reflected that, right? People don't see it in regards to Salesforce yet. They will see it. And the reason they see it so easily with Palantir is the overall revenue growth. With Salesforce, because the component of the business that's growing so fast right now is such a small number, people don't see it yet. They will see it in 26, 27, 28. And that's why I need to build out this position rapidly, okay? So Salesforce, I love this one. And I'm going to continue to buy it. I'm going to make it a massive position likely in the public account. I'm going to probably build the position in other portfolios as well. And then we'll let the chips ride and we'll see what happens. I think I'll be right on this one. I think I'll make a ton of money. I think it's going to be very anti-stressful. And I think it's going to be very exciting. And whenever you got Benioff leading the company, it's usually very exciting, okay? Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer. So Salesforce, this is a new position for me in the public account. So far, I'm up about 3.7% on it. 243 is my cost base on this, relatively new. I just started adding this one September 4th, 2025. The thing with Salesforce is this stock's been dead for 5 years. Dead for 5 years. Now, there's two reasons the stock's been dead money for 5 years. One is it was overvalued. Two, people have given up on Salesforce. Now, when you look at the numbers, you say, what are they giving up on? These numbers look great. But it's what has happened essentially, okay? Now, I posted this inside the private stock group, okay? Basically, Salesforce, keep in mind, Salesforce is going to do well over $40 billion of revenue this year, okay? Well over $40 billion. They have this data cloud and artificial intelligence side of their business, which is growing rapidly, 120% growth on a year-over-year basis, right? They're up to doing over $1.2 billion on basically annual recurring revenue. But it's a really small absolute number when you compare it to a business that's going to do, probably between $41 and $42 billion. So although this side of the business is growing rapidly, in Agentforce, which they just launched in the past year, essentially, Agentforce has been taking off, and this is an incredible opportunity. It's definitely worth diving into and getting educated on what they're up to with Agentforce and why it matters for mid-sized and large companies, essentially, right? But this business is growing rapidly, and so you got to understand this company is really going to start to be very positively affected by all this growth here in 27 and 28, because that's when these numbers are going to be huge on an absolute basis. And that's when it's really going to start to increase the revenue growth rapidly with this company. Now, additionally, they should have the Informatica deal that should go through. It's about an $8 billion acquisition. That deal should go through in 2026. So the revenue is already going to get boosted up significantly in 2026, slightly because of this, even though it's still going to be a small absolute number, but really because of that Informatica deal. And then obviously there's a revenue growth that goes on at Salesforce in general, right? So the growth rates for Salesforce, I think in 26 are going to be an acceleration over 25, right? Then we're going to see another acceleration in 27. I think we'll see another acceleration in 2028. The one wild card is if we have some monumental recession in the next, 2 or 3 years, that could throw things off. But that could be said for any company. But as long as the economy is okay or good, you're going to see revenue growth acceleration in 26, revenue growth acceleration again in 27, and then revenue growth acceleration again, in my opinion, in 28, which is going to be very exciting times for Salesforce, okay? Now, I don't think my bullish case for Salesforce is bullish enough. I think I got to up these numbers. I think I'm going to redo my projections tonight, because I think my bull case should be even more bull than this. I've been doing 12% revenue growth on average per year, 2026 to 2029. Now, remember, the Informatica deal should go through next year. That's going to be a huge boost to revenue. Then they're going to likely integrate that, start selling that even more rapidly, right? Probably go up on pricing. And then the absolute numbers on their AI side of the business and data cloud is going to really start to matter as the years go on. So I think 12% revenue growth is too low for a bull case on Salesforce. I'm going to probably bump it up to 14 or 15%. So just understand what you're seeing right now is actually not bullish enough. Net income growth, I think 20% is very fair for Salesforce going in future years. 27 to 32 PE ratio, so that gives me a compound annual growth rate on the low end about 16%, high end about 21%. My base case, I also want to take my base case revenue up to probably where my bull case was at. But this is my previous base case, 10% revenue growth per year, 26 through 29, 18% net income growth, right? 25 to 30 PE, that gives me a compound annual growth rate of 12% low end, 17% on the high end. And then my bear case has 6% revenue growth on average. Complete dumpster fire disaster for Salesforce. This is like they got disrupted by AI or something. 10% net income growth. That gives me compound annual growth rate of 1% on the low end and 6% on the high end, right? For Salesforce. Now, additionally, you got to always think about who's the big dog leading the company. We spoke about some of them already in this video. You got Benioff leading this company. The man is an absolute goat salesman. I mean, an absolute goat salesman. He is incredible. The job he has done leading this company over time, I mean, just a 101. Either he grew Salesforce from nothing into, I would say arguably or probably definitely the most important SaaS company in the world, the most important, customer relationship management company in the world. It's incredible what he's done. And so, you just don't bet against Benioff. Don't bet against Benioff. Anybody that's done that, I mean, the man's got stories on stories he can tell you about, back when he was friends with Steve Jobs and he worked for Steve Jobs. He can tell you stories about when he worked for Larry Ellison and advice he got back in the day. And he's full of all types of great stories as well. Now, I am a Palantir shareholder. I've been able to take ridiculous profits in Palantir this year, right? Incredible gains. And I'm still sitting on incredible gains, but I only own 1,000 shares. And the reason being is Palantir should not be valued more than Salesforce. It shouldn't even be remotely close. I'm not even convinced Palantir ever is going to get to a revenue number that Salesforce has. So the fact that the company's valued larger than Salesforce shows, one, Palantir is significantly overvalued. Doesn't mean it can't get more overvalued, right? And two, it shows like Salesforce is incredibly undervalued right now. So just something to keep in mind there. And all that will be proven out. I know Palantir inside and out. I know Salesforce inside and out. Trust me. Palantir's valuation likely peaks in 25 and then starts to go down and goes through a really tough time. That's why I've sold the far majority of my shares. And when I say a tough time, it's going to go through a tough time for years. And Salesforce is just going to continue to get larger and larger. And we'll see Salesforce eventually likely get to a $500 billion market cap. In long term, they have the potential to become a $1 trillion company. When I say long term, if we're talking like 10 years out, they could get to a $1 trillion market cap over time. Okay. So Palantir, I'm not sure they'll ever get to a $1 trillion market cap, just to be quite frank.
Hey, I want to thank you so much for watching that clip. I hope you really enjoyed it. What I'm showing you in front of your face right now is 1000xstocks.com. This is such an important website and service to use if you want to research companies, if you want to understand companies on a high level, so you can hopefully get better results in the market. And we know as the years tick on, money compounds. It is so important you research companies, you compare companies, you're listening to conference calls, looking at SEC filings. All that's included into 1000xstocks.com. So to enjoy 1000xstocks.com and to apply for that service, you can go to the description area of this video, or you can go to 1000xstocks.com, whichever you prefer.
Next one up here, AI-driven bull market will continue, but a near-term pullback is likely, says Julian Emanuel.
It's a buying opportunity, especially for AI-driven leaders. So here with more is Evercore's Julian Emanuel. We were speaking about this earlier on the show. I don't know if you had a chance to listen, but for so long, AI seemed like a buzzword, and all you had to do was just drop it here and there in an earnings call, and you got a little pickup in your stock price. But now we need to really see some of those gears turning. We need to see what it means to actually be capitalizing on AI. What should we be looking for here, even if you see some choppy movement before we really take off?
Yeah, and look, again, if you think about it within the context of the last great technological revolution bull market, the internet of the late 1990s, choppy movement is part of the script. And so in that respect, considering we've gone up almost uninterrupted since the April low, which itself was a scary chop, as we know, it's to be expected that we might have a little bit of indigestion, particularly September into October, when we've got uncertainty. We're going to have a payroll revision number tomorrow that everyone is sort of focused on. And again, the inflation figures, tariff rulings from courts, all of these things together. But what we're looking for specifically is the continuation of this dialogue from corporate America in general that we've heard for the last several months, that they're actually becoming front foot on talking about how they're using AI to generate revenue, not just the cost save, it's the revenue generation. And you're seeing it across industries. And for us, that really bodes well for the setup into 2026.
It's interesting because Sherry Paul from Morgan Stanley was on earlier in the show, and she said, yes, of course, there's tariff noise. There's other macroeconomic uncertainty. You're talking about CPI and PPI and maybe a jobs revision. But she says that doesn't really matter so much because innovation is where it's at. You got to stay focused on AI. But you're sort of saying, yes, but we could be choppy getting there because of those macroeconomic headwinds. But basically, you're saying, hold tight, use the opportunities.
We are, because again, going back to, and if you think about sort of February, March, and April, great bull markets, and this is a structural AI technology-driven bull market, great bull markets find ways to try and to get investors to get off the theme, to do some selling. And our feeling here is you don't do that because basically when you think about it, what really drives stock prices higher in the long term is earnings, and we're very optimistic on earnings into 2026.
Okay.
So, what do I feel about near-term pullback here? So, listen, you can stress yourself out so bad about near-term pullback, when's the perfect time to buy, all these sorts of things. The bottom line is Google going to be a lot higher 3 years from now, 5 years from now than it is today? Where do you think their revenue is going, their net income's going in the next 3 years, 5 years? What about Amazon? What about Meta? What about AMD? Like run your numbers, run your projections, look at the valuation. We're about to run projections here in just a moment. Don't stress yourself out too bad about if the S&P 500 is about to go up or down the next 5-10%. Because I think Warren Buffett or Peter Lynch or somebody famously was quoted saying, I can't tell you where the next 10% in the S&P 500 is, whether it's up or down, but I can tell you where the next 90% gain or the next 90% move in the S&P 500 is, right? It's higher. And so 100%, whether we have a 10% pull down or 10% up move, who knows? But the next 90% is higher. The next 100% is higher. The next 500% is higher. It's up. So just something to keep in mind there.